Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning. Today, non-farms payrolls. And this is an interesting situation. I'm not sure I've ever come up against before quite like this. This number is widely expected to be pretty bad. So, like, if non-farms is 130K, and that's pretty weak. But like the range of forecasts is pretty wide, and I think that the lowest they have is like negative 300, 400. But there is a possibility when you look at some of the data and other kind of predictors and stuff, this could be like negative 500, 700. Like this number could be really, really bad. But it's also the overnight setup we got here. So let's come over to the volume profile and everything. So the S&P 500, well, it looks like my charts are a little bit off here, but we had pretty good move down yesterday that snapped back. Let's see if I can show it over here on the 5-year maybe. Yeah, it's like I just lost like a whole day. It's like I lost a whole day or something. Okay, they moved down. No, that one's oil. Why am I looking at oil? This one right here. Yeah, well, it's not showing the whole day, but we kind of moved down pretty hard, and then Amazon news caused us to spike back up, and now here in the overnight we're down at 44.75. And there was a couple of developments in the Eurozone and so on and so forth that have kind of risen interest rates. So the 5-year or the 10-year is back up at 1.828. Oil is significantly higher, getting spiked up there yesterday. What was the piece of news? Oh yeah, they're kind of the war with Russia thing kind of spooked them yesterday. So that's where oil is at, although I think that might come back. Natural gas looks like it's still kind of on the downturn. And gold and silver are holding their moving averages. I think that if this number ends up being bad, probably your best trade here is going to be going short the dollar, although the dollar is already pretty weak, 95.2. Because I think kind of what we're looking at is the risk of stagflation is much greater here in the United States than it is abroad, I think. I think that the Europeans didn't pump nearly as much fiscal stimulus in, and they're already kind of ahead of us on the rates. So we'll see. I don't know why my data is all screwed up. Maybe if I come in here and I do reload all historical data on that chart. Well, come back here. So we got a few minutes. Should we make a poll here? Yeah, we got a few minutes. Poll. NFP above, below, in line. And can answer the poll there. Tell me what you think. Well, I'm kind of looking at this like I know what I have to do, but I don't know if I have the strength to do it. We'll see. I did put something in on the 5-year. Although this ain't right. I must not have these columns set up right. I don't know. It's there. The volume profile column, it's there, but it's just not showing me any volume for whatever reason. Kind of making me suspicious. It does show up on out there though. I don't know. I'm not seeing any volume in the 10-year either, so I don't know. All right. All situated here. Guess I'll pull TweetDeck out here. Pretty good slate of stuff to come here. So, all right. So again, top line number expectation 125,000 US non-farm payrolls. What data feed do you use? I use CQG right now. I honestly I prefer Rhythmic. I'm kind of thinking of switching brokers again to get Rhythmic back. I'm not going to mess with the S&P 500 here for now. Okay. It's higher than expected. Ninja Trader is dying on me here. What the hell? So 400, that's really good. Dang. Well, the actual move is not. It was a pretty good move, actually. Well, the micros over here are all sorts of screwed up. And Ninja Trader will not let me out of the trade. Can you fucking believe this? What? Now this is going to be a bloodbath because that number was way better than people thought. Well, this is going to require a call. Well, it's not. It's I don't know what the deal is. It's kind of weird. So here, part of it is that the micros are not putting out any liquidity. So I think that that's maybe why. It might not be Ninja Trader. It might not be Ninja Trader. Maybe what I'm seeing here on the DOM in the micros is accurate. The S&P 500 is just getting creamed. Okay, see now the 10-year does have stuff out there. Wowzer. The 10-year is getting creamed. Which one's going further? It looks like the 5-year, but pretty big order there at 126.29. What do you think about that? We should have ended the poll. Y'all put it above expectations because you put it in afterwards, you cheaters. Doesn't feel good. See that right there? Bid of 1746000 violates high band. Okay, so is it because instruments? Let's come in here and look. 10-year. Zero zero one. 001. No, it's not that. So I just talked to support and they tried to close the position and it wouldn't let them close it either. Okay, well, he thinks that it's just because there is no liquidity in the 5. So I can put a limit order out here. If I try and put an offer, oh, actually, it does let me put that one out there. But will it let me put a better bid? No. It says that's no good. Maybe I just need to be a little closer if I put it there. Ah, because I'm the only one, huh? Aha. I see what's going on here. It was. Wait, why did it say that my Q is 3? Why does it say that? What the hell? Yeah, I am the only. Well, I'm the only volume that's gone through. That's true. Which is kind of funny because the 5-year is where it should be more sensitive, right? Well, that was a boner. Okay, so you know what this means. You can go to jail for spoofing with one order. Well, you know what this means. We need to figure out what it really is supposed to be now. Tools. Okay, now that we're seeing some more limit orders placed. Ha. Oh, it let me out. Okay. It's okay. We're okay. Okay. We figured it out. Did one of you guys put an order out? Put limits out? No, we're gonna. Well, now it's showing back up. So it kind of wasn't necessarily Ninja Trader's fault, right? Like their platform. What happened? What happened was we just ran into a situation that the platform has literally never seen before, and it didn't know how to deal with it. Is what happened there. Is what do you do if somebody tries to submit a market order and there aren't any bids or offers out the market? That is effing hilarious. While I'm trading against a market maker, the market maker did eventually move his thing. You know what the funny thing is that because of what we did here in the 10-year, we're not, we should have eaten like $100 loss there, but I'm only down 20 right now. Wow. Pretty insane. Yeah, right? Well, it's a good thing I hit into the 10 when I did. Because it turned into a spread and I just lost on the flattener. I put a steepener on and I lost on the flattener. Man. But let's talk about the news though. Now that we've figured that all out, you know what? I am like relatively calm about this. I'm way more calm than I should be about this. So moral of the story, no, it is regular hours. Moral of the story is don't trade the 5-year, apparently. I wonder if when the news was happening and everything, if I had stuck a thing out there. I think that maybe if I had better like external data. Oh wait, what happened here? Okay, well, okay. So first of all, the average hourly earnings was up spot 7 versus an expected 0.5, and the non-farm employment change was 467 versus 110. But the unemployment rate did increase slightly to 4% from 3.9, which kind of suggests that some guys are getting back into the market, I suppose. And geez, like that's not a very good market for interest rates, right? The S&P 500 seems very upset about it as well. But it's good. It kind of suggests that the slowdown that we were looking at is not nearly as bad as we thought. And you know what? When I took that trade, I wasn't necessarily thinking for sure it's going to be bad. I mean, I knew that there was a good chance it was going to be bad, but I was also thinking from the perspective of from the way that this has moved, if this number surprises to the downside, it's going to rip back so hard. So it's all good. I'm quite surprised that I came out intact after all. Everything is said and done. That's pretty crazy, man. Okay, so that's all the news. That's the stuff for you guys. But for me, holy shit, guys. What? I mean, I feel kind of dumb. I don't feel dumb. How dumb should I feel is really the question. How dumb should I feel? Because I knew I was taking a risk there and everything, but even when liquidity is really bad, like I knew I would like take a bad thing and I would maybe take a $50 loss and everything, but that the liquidity would just completely pull. There wouldn't be any orders out there and it wouldn't be able to do anything is a little like, what? Wait, what? You know what I could do is I could just sit out here with limit orders, all day long and we could do some real my goal in life is to do actual market making in the 5-year. That's apparently what needs to happen here, folks, because holy shit. But I would need I think I would need a Bloomberg terminal. But that's pretty iffy that the that the software doesn't know how to deal with that. I shouldn't say iffy. I mean, should we really expect them to know what to do with that, Well, so with all of that, where do we think we go today? Because the chances of that 50 basis point hike is, I think, a lot higher now, right? Man, what would have happened if I had done the opposite and I had gone long in the 5-year here? What would the market maker have done? Okay, so let me see if I can come back here. I don't know why it didn't open up the tab that I wanted. Also, the price that it let me get in the 5-year is a little sketch. Like, how did I get that? Wait, was I the first one to do anything? Holy shit. It was. It was the first one to do anything in the 10-year there. Well, geez, guys. I'm the first one. That's probably not a good thing, is it? They were coming back there. I could have crossed the spread, but well. So the robots must have something sitting there to be like, okay, I don't put the liquidity back on until I see other people doing it or something like that. Well, I really want to see what happens when the 10-year touches that 29. Yeah. Okay, so now I'm seeing it on the run. 1.674. Yeah, so those numbers are delayed. I was wondering if the quick strike tool would give me a good enough idea of where we're supposed to be, but it doesn't. So if I wanted to do that, I would need to go and write some tools to calculate it myself. Which is to say, well, there's a couple of ways that I could do this, but one way that I could do this is I could just go in and say, what should the yield be today based on what my expected future interest rates are from the Federal Reserve. So if I know that the Federal Reserve is going to raise interest rates 5 times this year, and I'm changing my projection, like what should it be to kind of get a roundabout number, we can calculate that sort of a thing. I have the models to do that now, or at least I read a book that has a model that I think I could do. But then the other one that I could do is I could just try and calculate the difference between the on the run and the 5-year, and the basis and all that sort of stuff. Man, which is a complicated thing. But then try and sort out what the 5-year yield should be based off of what the main 5-year is doing. Could also do that. And then I could be, placing my orders out there. But I don't know if it would matter because somebody else would have to trade against me still. And if nobody actually wants to trade it. So I don't know. Kind of interesting, right? Oh, did the big order cancel? Oh no, 29 was where the big order was at and they took it. Well, I need to pay a little bit better attention than that, right? There's some pretty big amounts of volume trading in this area too. So the 2 and 10 steepened considerably, but everything else seemed to flatten. That's interesting. So that's probably because the twos are just, yeah. Where else could I go to try and get these prices? Oh, these are the fixing. So you wouldn't see it until today. Yeah, I get you. What if I just go into deliverables? On the run, 1.19. No, the 2-year is like way off. What is this? Strike as yield. Oh, there actually is some activity in the 2-year. Hmm. That was like this big long thing, and now I'm just like, okay, now what? Hmm. So I'm interested in knowing there was definitely some big amounts of volume that traded there at 29, right? And it kind of seems like now they're done, like they're not moving. Hmm. And the 10 year is actually moving around like quite a bit here. It really gets me thinking because I've thought in the past, well, we should just make a robot that puts the liquidity out in the micros. And I was like, nah, that wouldn't make sense. I'm not fast enough. And there's already something out there doing it. But after that experience, kind of seems like maybe it's not a bad idea. What do you guys think? Should we put in the effort of doing that next week? Like we could take a little bit of a break and we could just try making a market making thing. It's very interesting, isn't it? Yeah. Okay, so that was a really big snapback in the 10 year here. Let's go, champ. Yeah, I don't know how well it'll work or not because I think that the issue is data, right? So if, for instance, I had Bloomberg data and I was getting the actual indexes that are calculated from the uh, actual bond market trades, then that would be a little bit different. I could just use that directly. I think that the best option for us is probably, wow, the Fed, they're showing 3 rate hikes now. Hold on. Anyways, um, so many thoughts going through my head. We would probably need to calculate it by comparing the 10 year, right? We would probably need to do it by comparing or not against the 10 year, but just against the regular futures. We could make a calculation based on the regular futures, right? Did that Does that make sense? I don't know what to say. And we could do the whole curve too, because like the whole thing is that like the thing that's funny is that you've got like here's the 7, we got the 7, the 10, the 30, and the 5 over here, right? And there's kind of this curve, right? And but then there's the 5 and there's the real 5 because there is a slight difference between these two because this one is like cheapest to deliver, whereas this other one is going to be. I'm going to cancel that for now. I don't want to actually do that at the moment. This one is cheapest to deliver, and this one is on the run. So I have to know what the basis difference between those two is, and that's kind of the fuzzy area where I'm going to have a hard time. Where the one with the index, I think, would have an advantage over me. But I could put the liquidity out there, but who would trade with me? It's the problem, and I've always kind of thought that was like, well, but why bother? Interestingly enough, it doesn't on my thing. It doesn't show me the volume of where I entered. So that's kind of interesting. Well, it looks like that they are bouncing back and rebalancing after smashing through that big order at 29. I'm kind of thinking like maybe we could take some risk on it coming back down, but I'm not so sure that that really makes sense. It is curious that the 5-year is the 2-year is more active than the 5. So should I have done it in the 2-year? Yeah, IVPMI in 10 minutes. Yeah, I don't know if that's really a big deal. It's a Canadian number. I guess Biden is supposed to speak on the jobs report. So there's that. You have a couple of questions. Go ahead. I'm just thinking back on what just happened to me there. The thing that was the most interesting to me was that it wasn't until I put a bid at what the last market price was, and then it would let me move it up by tens. So I moved it up by tens, and when I did that, then all of a sudden the market maker woke up and started putting offers out there and let me out. I saw a video of Peter Davies trading correlations between the instruments. Do you think that is worth going that path? Well, I think that if you're going to do this at all, that you should at the very least be paying attention to what the correlations are, yes, and watching correlated instruments because you need to get an idea of what actually is the fair price, right? The market making robots out there, the people that are providing the liquidity, they don't necessarily come in and say, well, it's more likely to go this way, so I only want to put bids out, or like they just put liquidity out, right? So how does it make money? If you've got somebody like me that knows what the news just was, that's probably a bad example. But we're going through regular trading. I know a piece of information. The robot doesn't know that. It just knows like what is the current like you know, market prices. Okay. So how does it generate edge? It's using correlated instruments, and it's trading the relative changes between those, right? So if you're doing it in the treasuries, I'm watching here all three of these, and I'm looking to see how they changed, right? So the way that it spreads is something that I have to take into account. But I can also come in and say that, like, well, it should be steepening, and the 5 year ticked down 3 ticks, but the 10 year didn't. So does that mean I should either sell the 10 year on it ticking down too, or buy the 5 year because that was too far, right? It's trading the correlation. So you might not be doing market making and trying to use that kind of a setup, but you still need to be aware of it. You still need to be watching it. And if you're going to trade the equities primarily, or let's not say you're going to trade the equities primarily, you're going to scalp the equities, and you're only going to look for like 8 to 16 ticks or whatever the deal is. Probably you're going to want to have the NQ and the YM up as well. But that doesn't mean that you have to rely only on that, right? Because if you are informed, that's kind of an advantage to you, right? Well, but it is kind of trading the spread, right? You're going to want to watch the spreads between the NQ and the ES and the ES and the YM, and see how those are changing, and kind of account for that in your scalping strategy. Because what's going to happen is you're going to see a move in the NQ that's like, well, that one moved down and it was too far, and the general trend is up. So I want to buy the NQ here, right? But it might not make sense to actually buy the NQ there if the spread is unfavorable to it, right? Look for the leading one, spot the one who's lagging, and then follow the others. Yeah. It, but the general point here is, yes, it's a very good idea to watch the correlations between instruments and to have a correlated instrument up. Very much. So the question here is that going to snap back even more? Or was that the extent? So let's like reset it here. You can see that the 10 year in particular is having a really difficult time trying to get above 0.2 half. Eurex shows you which companies are market making futures in which instrument on the website. Well, maybe we can find that in the CME and see who has our money. Why did it just do that? The spread in the 5 year is pretty ridiculous there, isn't it? I think that hitting him at 1.78 wouldn't be a terrible idea. Noticing that the spread in the 10 year is increasing here. So something's going on there. Seems like there are a lot of market making companies out there, but I have no clue about market making. Yeah. Like there is room to come in here and be like, yeah, I'll reduce the spread. I'll take the risk. Tell the robot to only favor one side, only provide liquidity on one side, because we can do that. Oh yeah, the participant list. We'll try and now. I don't know. I think I should focus over here, but we should try and find it on the CME, because I think that there are. I think somewhere in there there's similar information. Okay, so interestingly, so I kind of forgot what I was doing, and so now I'm looking at the FedWatch tool, and they were pricing a 25% chance of a 50 basis point hike. I think it should be higher than that. That might be like delayed data though, right? Oh no, if I refresh it, it's a little bit higher, 27.9. I think they think that they could have a ways to go still. You can learn something in crypto about. Yeah, you could do it in crypto too. So I'm wondering if I had in the 10-year. Oh, I don't know. See, the thing that's crazy to me isn't just that happened to me in the 5-year, but that I was the first person in the 10-year to take a trade. Like I was like, and that was even probably slow. I was like, I couldn't get out of this one. Okay, fine, I'll get into this one, and try and save it. Right. Um, I was the first one to do that. But I'm wondering if I had only done it, if I had done this in the 10-year instead of the 5, how much would I have lost? I would have lost like $15, and then I would have flipped around and I would be up like 15 by now. Is that what would have happened? That seems a little bit too rosy of a scenario. Like, I don't see how I would have gotten away with that. But based on the volume that we saw, it kind of suggests that that's what we could have done. Well, they're holding these price levels pretty well so far. You know, another thing was when we were putting those orders that all failed or were canceled. Okay. $1.834. Oh, well, that was way too high. Hmm. Is the institutional jigsaw? Probably the institutional jigsaw course is probably overkill for you. Peter Davies is like that is for really is for institutions, and probably the other courses are going to give you the knowledge that you need to be successful. And if you're not, you know, you're having a hard time understanding with that information, I don't know if the institutional course is really going to make a difference, or at least that's what he's said. So there was a trader that he, they said, "Oh, what do you think about the institutional course?" Yeah, I mean, I've never taken it, but that's just there was an instance where there was a trader that he has done pretty well since then, apparently, or at least had a good run, and they did a webinar and stuff. And this guy was having a hard time, and he asked Peter, "Oh, should I take the institutional course?" And Peter said, "Nah, that's you know enough." And he had taken the other courses, and so like the institutional course really is meant for institutions. Oh, right. Okay. Mm-hmm. Well, their treasuries are coming back pretty hard here. Back to 025, huh? I wonder. I wonder if the exchange needs to change something. Like the exchange was rejecting me. Hey, let's go and look up this error message. Can I still find it? Do we still have it? $2179. Oh, look, here's somebody having the same problem, actually. Price is outside bands, ask of percentage, violates high band percentage using delta stim equals percentage. Well, that's just the error message that we just got. Hmm. Oh, here's an interesting thing. Okay, so I'm just searching, and they pull up notice of disciplinary action, something that happened in 2017 following an evidentiary hearing on the merits of October 16, 2016. A panel of the CME issued a written decision finding that between May of 2014 and July of 2014, Chen Wei Zhu, a non-member, rearranged the execution of 13 round-turn transactions with trader A, resulting in 41 trades with a total of 56 contracts in various illiquid option instruments for the purpose of transferring almost $20,000 from accounts controlled by trader A to two of Zhu's accounts. The panel found that during the 3-month period at issue, the trades between Zhu and trader A were executed in illiquid back month FX contracts. The orders were placed opposite each other for the same price and in most instances for the same quantity. Out of the 180 orders placed by trader A, the Globex match engine rejected 145 because they fell outside of the exchange's existing price band, resulting in a 2179 error code. The 2179 error code was sent only to trader A and would not have been known to any other market participant, including Zhu. The panel further found that moments after trader A received the error code, Zhu modified his existing orders to either increase or decrease his order price, or canceled his order and re-entered a new order within the price band limits. Based on these facts, the panel determined that the trading was prearranged. Okay, so that is the whole thing. And this is just the same thing. Now it's on here somewhere. 2179 prices outside bands. So they have like bands. Oh, so oh 719. The thing is that when I was looking at it and trying to figure things out, I did see orders out there, right? And there was an order that was like way out there. There was an order that was way out there, and I thought I should be hitting that. Why isn't it hitting that? So it it kind of seems to me like the exchange should maybe look at this. But how do you tell them that? How do you tell them? Who do I tell? Can I prove that? Can we go back here? Let's see here. This is so very interesting to me now. Theater mode here. Okay. So we come back here. Oh, I have to make it really big. Okay, so that's too early. So it was almost 1.7 that I took it at. Okay. So now I got nothing there. There are bids there. Okay, so now I'm scrolling up. I didn't scroll up high enough. Okay, so right there, right there. $1.746. There was an offer. There was an offer out there. I click it. It errors out. What bullshit? What a load of bullshit. Exchange? You owe me $40. What's the timestamp on this? How do I complain to the CME about this sort of a thing? Oh well, it was okay, but we can put the time 6:38:23. Okay, 38:23. I tried to hit a market order at 1.746 in the 5-year, and the exchange rejected it, saying it was outside the price bands. I had to put limit bids out and raise them until, and then once I started doing that, then it got out. And like how the fees it is just, there's a little bit of a delay on YouTube. There's like 5, depends, kind of depends, but for us it's like 3 seconds or so. Okay. So I approve it. That's proof, right? There was an offer. There was an offer there, and it would not let me hit it. So how do we contact the exchange and complain? Do you guys know? We've never done this before. I want how much was that? 1.476485. So almost 4 basis points. So that's like $40. Well, it's like $40. Exchange wouldn't let me out. Contact, maybe? Contact a representative. Maybe company contact us. Okay, so there's a bunch of numbers I can call. Who should we call? Who should we call? Trading production environment, real-time support of live markets and trading services? That seems like maybe we could call them. Learning production environment, enterprise applications, co-location, e-quotes, API development, trading floor. Fees, market regulation, broker tech, clearing, products, services, investors. Technology support help desk. Should we try that? Yeah, it was a little crazy. Can I see that one was 1.746? Yeah, I can see that one. The first one that it tried to do was at 1.8. So it's interesting. I mean, the thing is that if the original order that we put in had gone through, the loss would have been even worse, right? Because it was at like 1.8. Or yeah, and we eventually. Oh no, actually, it would have been even better than the price that we got out. Would have been five. Would have been 5 ticks better. So, hmm, hmm. This is so interesting. I mean, the way that it works is the way that it works for a reason, right? And I can kind of see why they did why it is like that. But I don't know. What do you guys think? How would you solve that problem? Well, for one thing, I don't think that the error message that you get there is very clear. S&P 500 is recovering here pretty well and is now above the news price. Platform close, calling quits for today. I think we should start a Futures IO thread about it because I think it's hilarious. Well, look, I could have hit into that 08 half and I would have had $10. That's okay. I think the chances that they do a 50 basis point hike here in March is like increasing exponentially. Yeah. Well, now that we've kind of balanced back towards these lows, spirit quieted down quite a bit. I don't know if there's going to be another leg down though. It seems kind of sketch that they would. I mean, not sketch, but like probably a lot of traders are go home for the day after that. Hmm. And it does kind of look like the volume all balanced back out. Like I think that most of that selling that brought us down here could be out by now. There's really just the cumulative delta and everything is really just flattened out. S&P 500 looks awfully bullish. What do you mean by how do you know about the market impact of earnings? Is there a forex factor? Oh well, if you want a really good earnings calendar, I got one here for you. Here's the link that I use to look at earnings. So it's nice because it'll show you everything that's coming out that day and the time, and you can like rank them by market cap. Okay. Some interesting flattening coming in here, especially between the 5 and the 10. Gonna reset things. What a day. But it wasn't, in the end, it really wasn't Ninja Trader, was it? So we kind of tried to, we are obviously, you guys were getting excited, and I see you, NASDAQ killer. I'm like, I told you, Ninja Trader, but it wasn't actually Ninja Trader, was it? It was an oddity with the exchange rules. No. They don't understand TLA trading. Okay. Like, if I, man, oh, this is really interesting. If let's just say that this was some fantasy world where the instrument that I was taking that trade on was like the tick size was like 10, 100 times higher. Okay. So instead of losing $88, I was losing like $8,000. Okay. And that $8,000 was more than my account. If the broker went out to try and close the trade, they would have gotten that same error message still. It would not let them execute because the best offer and the best bid were too far outside of the exchange mandated price limits. So until a bid shows up and gets the spread close enough to the best offer, nobody can trade anything. Do you get what I mean? Do you understand what I'm saying? So even if you had had a daily loss at your broker or anything like that, it wouldn't have made a difference. So we just did something. We just did something that probably only a handful of people have an error message that probably only a handful of people have ever experienced. Because that typically the only time that you would see this kind of error message is if you were trading some sort of back month that you shouldn't be trading, right? Because here we were reading there was an incident at the CME where somebody was pre-planning trades in a back month. And often when they tried to execute those trades, they would get that error message because they didn't understand that. Pretty funny, right? I want to see if they shy away from this 29 here again. Or if a lot starts trading there. So on one hand, it's kind of like, well, Seth, that was pretty dumb to try and take a trade going into such a big non-farms payroll on the 5-year. I think I underestimated the way that the liquidity works. But you know what? You know what else, though? I think that explains. Remember when I put a bid out and I started moving it up. And when it finally got close enough, then more liquidity started showing. So I was also that the robots were probably getting screwed up by similar problems, essentially, right? So it may actually be the case. So this is funny. Now that we know this, we could mess with this. Well, not mess with this, but I mean we could help out, right? Because no, if we hadn't done that, it may well have been the case that there would still be no liquidity on the 5-year right now. Because it's going to require somebody placing a bid and starting to sequentially move them up. Because we tried to put some limit orders. Or at least I think we tried to put some limit orders out that got rejected. No. It's going to happen again someday, and we'll do it, and we'll see what happens. Okay. Super excited. I'm super excited to do it. You know what? I'm just happy that I didn't actually lose $80. That's all. That I made it back. What a freaking To, if I had really like just taken a complete loss on the day or like blown an account off of that, then I would be feeling awfully foolish. But no, instead we learned something. It's kind of fun. And it doesn't get much you don't get much better, more drama than that on this stream, does it? Oh man. I want to tell my story now, but I don't know how to do it. Oh yeah, I misunderstood that. You must excuse my English. Yeah, yeah. I hope I did a good enough job of explaining what happened for everybody now. Obviously, I was super confused at the beginning too. But now we have that experience. Okay, they kind of look poised to go for some new lows here, guys. They got through that 29 pretty easily, and I don't know. You could see some panic selling. Well, when I'm looking at this, where we are, where we're at, I would not put 2% on the 10-year. Well, actually, 2% is still a little bit far away. 1.925 isn't too bad. Let's see here. If I come back to like volume profiles and everything. Yeah, okay. So that is like a new low for the year. I have to go back to the dailies. 126 22 half to 15 half. Well, that's still awfully far away. So with this bear move that we're seeing here, it really puts us in like no man's land, right? Like there are not many prices until like down here to the like the 20s and 15s before we come to any kind of past price that has any kind of meaning or significance to people based on past price. Now we do got rates, and I don't really know how to calculate this. Well, I know how to calculate this, but I've never done the work. I should do the work. I've been telling myself I'm going to do that and do some programming to do that. We really need to do that to say, okay, based on we can calculate based on current on the run and then the change in the interest rate, what the new interest rate should be. I will put this just out if they happen to pull the liquidity. I won't like be stingy about it. Or rather, if it comes up there and I'm like the only one there, then I'll probably cancel it. But if somebody gets a little anxious and they hit into me, I might just lick my wounds and run. Hmm. Well, they did make a little bit of a excursion. It was bouncing pretty hard there, though. So another thing is that when we came in, we knew that part of the reason the treasuries had come down was because of some news events and things that had happened in Europe. But now you kind of have to wonder if they didn't know that the jobs numbers were really going to be better than people expected. Oh, we're going to get the IVPMIs here, huh? Hmm. This liquidity in the 10-year micro is a lot higher than usual, by the way. Hmm. So the treasury's bouncing back up here, but some of the volume that it took to get there is a little questionable. It wasn't very much. ES is kind of having a bit of a battle with itself here. Yeah, it's coming back really hard there. Well, I really like the Edge Clear guys. Seiko asks, what other brokers do you recommend? Ninja Trader Rate AMP Futures is probably the most popular and cheapest. But Edge Clear has kind of come on the scene and they've been doing a pretty good job. Man, that when that moved down, it moved down pretty fast. It bounced back really fast too. You're using them right now, says Captain Price. I've spoken with the brokers and there many times. They'll hit me up on email every once in a while and we'll chat. I really regret going the NinjaTrader route so that I could use the automating trading stuff because I haven't ended up using any of that, and I really just prefer the rhythmic data. Really, I just would like to be back on rhythmic data, you know? Somebody's buying that, so I want to finally be closed. Okay, so in the end, I lost $10. I was trying to get back to break even, but they weren't giving it to me. There's something about that price at 29 that somebody seems to know that it's too low. I'm really mad. I was really hoping that I was going to come in and get an amazing trade today, but margins, you know what? Like people compare the margins between brokers, and I like that one doesn't make sense to me because I just feel like you should never be anywhere close to the margin requirement. You should always have a pretty big multiple of what the margin requirement is in your account before trading it. So let's just make a note here. Oh, I can't. Oh, I don't have. I thought that's my order column, not. Never mind. See, somebody bought it up. It's falling back, but I don't know if this sell is something the other way or what. Okay. Well, I probably could have held on to that one a little bit and maybe be getting out here. Like that would have been almost a fill. Darn. Darn. But I'm still wary about this price. It does seem like somebody thinks there's, yeah, see right there? I don't know if the treasury can push lower. I guess we'll find out. I don't know if I really want to take any trade on it. Um, hmm, I don't know. A little bit too much excitement for one day, right? 1.92 might be like an okay. Even though it came back so fast, the getting out of the position, I think, was the right thing because there's definitely something going on with this price. Hmm. Oh, I have so many tabs open. Why? No. Nope. Let's refresh this and see what they've got. The probabilities of a 50 basis point hike now. $26.9. The change wasn't that much. It's curious. Five-year. A little flattener coming in. Yeah, it looks like a little bit of a flattener coming in. They might make a push for it or not. I don't know. We'll see. See if they come in again here or not. There's definitely a lot of changes in the level 2 here. 5-year ticked up. Oh, that's you. Well, welcome, Train Doodle. Thanks for joining us. Probably a bad time, a bad day because I've done all sorts of crazy dumb things today. So we had an interesting trading session. Hmm. So on the retest here, not quite the same thing, is it? And the S&P 500 is turning bullish again. About to push into regular session highs. Here's the 10-year right at the lows. There's a really big order there in the 5, and there's a really big order way below us in the 10. Yeah. How long has that been there for? I'm just only now noticing. Yeah. Haven't seen any kind of like big order book changes in my tapes since 127. So the treasuries look really pressured, but I'm not necessarily seeing a strong desire for them to trade it. It's being pressured because the ES is moving up, right? But that can often be how it goes with the treasuries, is that it will just kind of like fall almost unceremoniously on low volume. Because it's like a buyer's strike happens or something. Well, I'll have another video for another week. I'll be spending this weekend writing the next video, and then we'll get into, hopefully we'll put it out the week after that. and then that's when we kind of get more options. That's when it was like all of the promise content. I guess there's still the trader Nirvana video, which I think would still be a good idea, but I don't think it's nearly as great as all this other stuff that I've given you. So like, it will be about the inelastic market hypothesis. So it'll kind of cap off all of the things that we've been talking about. I'm still kind of trying to decide how I want to go about with that one, because I don't know if I want to go too deep into the actual study that was presented, but okay, so Octavius says that the big bids below us. Oh wait, what are you showing me there? 126.20 half. Oh, okay. They have been there for a while. Well, maybe they go to them. There's a reload there. You see the reload at 27? Carl Quintilla says the intraday realized volatility is so substantial that it's creating a dynamic where buy-side portfolio managers and traders are constantly blowing through their risk limits. Okay, so there was a 6K offer there at 27. It would be great if there were, well, there, we are going to talk about the things that could potentially create future orders. Now, what we're getting here on this move is interesting. This is a steepener coming back. There could be another. I mean, if the spreads mean revert, because we're down pretty, especially on the 30-year end of the curve. We're flat by quite a bit. And as of late, that's been mean reverting. So if that completely reverts through, I think that we could see another pretty solid breakthrough lows. I mean, we did see the 30-year definitely break. The Treasury broke by a tick or two. And you can see the 5-year kind of lagging there. But they could just continue to track the 5-year down. And given some of these big bids down here, I think we could still see some lower prices. Although for now, they're kind of backing up. Yeah. And ES just keeps driving. They've probably going to try and close that gap. Like, I think that you could potentially buy it here and get 4,500, for instance. Right? Well, there was a good bid there in the Treasury. 27.5. Yes, being a little fickle there. A pretty significant downtick now. There was still 27.5 was where there was a relatively large bid at one point. So probably want to see if they trade down through that, another tick down first before I get too excited about anything. But see, that bid at 28 seems to be pretty solid too. Oh, so they made a good trade. There you go. 1,000 long. I can't tell whether you took a long or what. It's kind of, I don't like their position window. It's not as good as the jigsaw one. That's curious. 30 years still kind of dragging down there. One short, one contract, two trades. Oh, okay. Well, things not looking so great for the ES at the moment. Yeah, MAE and MFE is like a really good metric too. Okay. Whoa. Okay. There's my data feed gets reset again. When that happens, does NinjaTrader say anything? Hmm. I don't know. Came across a Jigsaw video on YouTube, and in the comment section they were talking about a guy named Gary Norton. Are you trolling me? Yeah, we know Gary. I love Gary. So I have an interview with him here on the channel if you go in and search. But he was a market maker for firms for a long time. So he actually has a course, so you can learn a lot more about market making methods if you're interested in that, but it's crazy expensive. It's crazy expensive. But it's kind of this thing. Watch correlated instruments, set your bid and offer based on that, play on one side based on what the trend or information that you have, that sort of thing. I think the full course is like 5 to 8K, something like that. There's like different levels though. So you can go there. They have the yellow shirt course, I think is what it's called. And that one is that's free. And that's one that I think everybody should do. So I think it's called the nortonmethod.com. I don't receive any kind of commission or anything if you go and do it. So I have nothing to gain. But again, it's market making methods. So it's kind of like you kind of have to find an instrument that's not very efficient and has a good correlated instrument for you to trade with and all that sort of thing. So kind of like what we were saying here in the 5-year, where it was like, well, we could try and reduce the spread in the 5-year and see what happens. If we can if we can calculate what the on the run 5-year should be based off of the 5-year futures, which is the best, closest data point that we have. It'd still be a little bit of math, but we could do that. I don't know if it would make a difference though, because nobody trades the 5-year. Sounds complicated. Well, I would say it's not as complicated as what I try to do. It's just kind of like, in the moment, what is the situation based on the correlations? But I think I don't know. I haven't taken the course, so I know a lot about the old course, but the new course is kind of, I think that there's lots of little details in there, which is where you kind of get the. I don't think so. Some people, when they took his old course, they were kind of upset. They didn't think that it was good enough, and I think that part of that was that, yeah, like when you really see how some of these trades work, it's not as groundbreaking as you might think it is. But then at the same time, there's these teeny tiny little details here and there that you might not realize how significant and helpful they actually can be to you. So. Okay. It seems like there's a possibility that the Treasuries take another leg here, but for the time being, the 5-year or the 10-year seems to be having difficulty. It's just kind of holding here. I'm not really seeing big trades both ways anymore. It's just kind of rotating back and forth. The 30-year seems to be getting dragged down quite aggressively. So that's why I think I'm kind of leaning on that they do make another little leg here. But you see, like that price right there, that's why I was like okay with taking a fill there. Bitcoin had a 2-week high, huh? I need to put my note out. I don't think that Bitcoin should be up today, though. I'm really lost here, and I'm trying to find. Well, you're never going to find something legit. No. Okay, so here's the deal. Okay, day trading involves substantial risk of loss. It's not suitable for all investors. So I think that we have this idea in our minds that we're going to come out and we're going to pass the Top Step Combine every month. And that is not realistic. It's not even remotely close to realistic. In fact, making money every month in futures trading for a retail trader, probably not realistic. Okay. You got to understand that. Because again, you're taking a lot of risk. So you can have swings back and forth. Now, the next thing is that markets are very competitive. So, for instance, what Gary Norton does, okay, well, what he's doing is he's market making, and he's using, correlated instruments, other things that he can see to base his current price on, right? So he's not saying, I think that because of this pattern, yada yada, this volume that I'm seeing here and there, that we're going to turn around here or anything of the sort. He's using the liquidity. You need to use the current liquidity to see what you need to do. But ultimately, he's basing his trading off of something that he can use to calculate what the correct price should really be right now, which the most simple method is using a correlated instrument. And then he's just holding that that offer out there for the case where some retail trader that doesn't know any better hits into him. That's essentially what they're doing, right? But there are robots out there that are competing with you in the queue for those situations, right? So you have to be taking that kind of a trade on an instrument that's relatively inefficient. I know a lot of people are trying to do it on the NQ. You might be able to do it on the NQ. You might be able to, frankly, you might be able to do it here on the 5-year treasury with, but it's hard, right? And you're competing against robots. So it might be better to try and ride a robot, right? But that was like the way. Like, when you hear about these traders that made all this money in the 2000s, or Gary Norton, because he made money trading and he traded for firms, that's how they're doing it. It's not, there's no informed component to it. Does it make sense? Right? They're just trading, it's market making. Okay. But the robots came along and got so good at that we aren't really competitive in that arena anymore. So the places where retail day traders can make money, it's kind of iffy. You know what I mean? So, yeah. Where was I going with that? Okay, so the approach that I recommend and where I come in is, as I say, well, I can't necessarily be competitive in that arena. Maybe if I found an instrument that I was really felt confident I could do that in, I would do it, but I haven't. So instead, what do? I do informed trading. And sometimes it works out for me and sometimes it doesn't. I think today, we've done okay, I guess, in the end. In the end, today we actually have made money, but we did that by taking a big bet on non-farms payroll that ultimately ended up being dead wrong. And actually kind of makes me a little suspicious. Like, I thought that we'll talk about that later. So I'm going to stick to one thing and try to master it. Well, you see, how do I convince you here? What is it that I'm trying to get across for you? Okay. I think you're taking it from the approach of, I want to come in and I want to see this one consistent pattern, and I want to just mechanically trade that one thing and come away with a certain amount of money every day, right? Now, it's understandable why you would feel that way, because for one thing, that's the way that people have always said that you do it is you need to have emotional control and just trade your signal. And if you're consistent, then over time you will make money because there's an edge to your setup and all of this sort of a thing, right? That's the way that people have always told us to trade. And there is an advantage to doing that because you can just focus on that one thing and you can get really good at it and you can be consistent with it, right? But the problem is that the strategies that were doing that sort of a thing and people were making money from are not available to retail traders by and large. You might find a spot. So if you really want to do market making, the most important thing is you're going to have to find the right instrument to do it on. Okay. You're going to have to find an instrument that's not really very efficient. Some of the really big guys that got good, like Paul Rotter, for instance, they moved to Asia. Like, they're in Malaysia trading. Okay. Because there are less efficient markets there for them to play with. All right. Otherwise, you're kind of stuck. You have to take the other side of it. And the other side of it is, hey, guess what? Technical analysis, it doesn't really work. All of these things. And even with order flow, order flow is really useful, of course, and I would highly recommend learning it, but don't make the mistake that order flow predicts future order flow, right? There are things that can predict future orders, but it's usually not order flow, okay? What we see most of the time is just random. And So really your only option is you can either be the market maker or you can be informed. And so what do we try to do? We try to be informed. Now, with being informed, it's the opposite situation, right? You have to know what's going on in the market. You have to follow the news. You have to understand all of the different situations. You have to understand what the liquidity is, how retail traders might try and read it, and all of these sorts of things. And it's a really complicated thing, and you're always going to be every day is going to be different, and you're going to be constantly learning, and it's competitive, right? Because it's not just that you need to be informed, you need to be more informed than the rest of the market, which today it seems that we were not, right? So that's kind of the situation. No, I'm pretty sure that Paul Rotter is still trading over in Malaysia, or at least last time I heard that was the case. So it wasn't working in Europe anymore, and they moved. And more than one guy did that. There you go. Okay, so Siku Smalling says crypto was overdue for a rally. I'm hoping I want have the decline to get in. If I don't know. So the move that we're seeing in cryptocurrencies today looks unnatural to me. We got a pretty significant rise in interest rates, and the S&P 500 and necessarily going the greatest. The S&P 500 ain't exactly doing the greatest, right? I don't see any reason for Bitcoin to be going up today, but there's these guys, they can go and they can print Tether and they can move it any way that they want. So maybe now is a great time to buy it. I don't know, but in the long run, I don't want to be involved in that sort of a thing because they can find a way to screw you over no matter what, you know? You know what I mean? But it's a pretty strong uptrend today. It doesn't make sense with any of the information that we have. Why do you conflate market making with short-term trading? Well, what is the difference to you? Here's the difference to me. Here's what I consider market making. I consider market making trying to make money off of the spread, or maybe you're trying to make more than the spread, without using informed, relying largely on the spread and providing liquidity. Right? So if I'm coming in and I'm only taking a tick in the 10-year and I'm using limit orders to do it, then technically I'm market making. But I think that the way that I split it out is three ways. There's market making, there's informed trading, and there's noise trading. What most retail traders try to do is noise trading, and most noise traders lose money. I shouldn't say that like you can't make money from noise trading, because ultimately with doing noise trading, what you're doing is taking on a lot of risk, right? That's what noise trading is taking on a lot of risk on the assumption that the realized volatility will be less than the expected volatility. What do you mean by who is doing that? No trader. Well, but you do to some extent. But most retail traders aren't market making, are they? Right? Because again, market making would be like, I know what the price is supposed to be right now, and I'm going to put my bid and offer there based on what that correct price is, in the hopes that somebody that doesn't know what that correct price should be hits into me. Right? And if I'm wrong, the reason that I'm going to be wrong is because this other person that hit into me was informed, essentially. Knew something that I didn't. Right? That would be market making. Versus a one tick in the NQ is suicide. But no. But as a market maker, the spread for you is not necessarily the minimum tick size. Okay. you're going to modify what your best bid and best spot offer is based on the metric that you're looking at to compare price to and the probability of informed trading that's out there. So the more likely that there is to be informed trading out there, the more you're going to move your spread out to account for that probability of informed trading. That's why when when we start and we did the non-farm payrolls, the market makers pull their orders, and then when they bring their liquidity back, the spread is really, really wide because they need to have a wider spread to account for the probability of informed trading, right? So for you on NQ, that spread may be maybe a point, 2 points, something like that, right? But it's going to be based on what is the thing that's supposed to, you know, tell you how much, what the right price is, right? How accurate that is. So like here on the treasuries for these micros, they kind of have to have it pretty wide because there is this difference between these micros and these treasuries over here. There you go. I think we're in line now. Right. So in this case, in the 5-year, we can see that this market maker is having, and because there's only like one in there, we can see that their spread is 4 ticks. Over here in the treasuries, we can't, it looks like it's 1 tick, but there might be one market maker that is only putting his orders at 25 and 23, for instance. I wish you had brought that question up earlier because then I could show you. We could try doing market making in the 10-year, and I would show you, and you would see how we end up changing our spread essentially. Like the price that I start taking profits at changes based on how random things actually are. Essentially. Think they'll try and trade into that 25 there? It's a few orders hit into it, but it's a big, big offer. The bid isn't necessarily going away, though. Could be a spoof. Random from which? Well, if I'm doing market making, from my perspective, the majority of action is random, right? Unless those trades were from informed trading, it's just noise. They ticked it back down. Ooh, and 2 ticks, and then good offer. 23.5 pulling a bit. I was just looking at my trades here. S&P 500's not looking pretty. How many? Okay. I'm wondering if in the 10-year that this is going to be a trend day. It's kind of starting to, the way that it's behaving, it looks like it could be a trend day. So I think I might end things early here. I think my wife is supposed to be going to work. I need to go check on all of that. So what do we put in the title? Exchange won't let me out of trade. I think that's what I'm going to put in there. No, I get stuck in trade. Okay, well, trading at the CMI with my own self, me and I don't have as many characters in the title to put in there as I would like, but my own being, I'm glad we learned what we learned. Obviously, could have been better. Like honestly, if I had just waited for the news and hit into it with the 10-year, I would just be so pleased with myself right now, right? So, oh well. How many times? I think that it's only been like once or twice when I really been made a bet like that on the 10-year that it actually worked. So I don't know. Maybe that's the last time I do that. Hey guys, I will see you next week. Have a good weekend. In the meantime, stay profitable.